Good afternoon, ladies and gentlemen. Welcome to Chatham House Asia Pacific program. And I'm delighted and come here to discuss some major issue for the Chinese foreign policy in the next few years to come, if not decades. Now, I'm sure many of you in the audience here are extremely familiar with the terms, the Belt and Road Initiative. There has been endlessly discussion regarding what the BRI is all about and whether the Belt and Road Initiative is the way that China somehow managing the so-called debt trap diplomacy and therefore to have that so-called imperial overreach in order to dictate to the world. And that seems to be the conventional wisdom among many Western commentators. But however, recently, Chatham House has published a policy paper, a research paper named as Debunking the Myth of the Debt Trap Diplomacy. So how recipient countries shape China's Belt and Road Initiative. And obviously that's really the way of challenging the conventional wisdom that many part of the Western society has towards the Belt and Road Initiative. So whether this debt trap diplomacy argument is really valid or not, and we'll soon find it out from our two distinguished speakers today. Now, join with me today, we have Dr. Li Jungs, who is the reader in international politics at Queen Mary University of London, and also Professor Shahar Hemeri, who is Associate Professor of International Politics at the University of Queensland in Australia. Now, today's event, we will not operate under Chatham House rule, so it will be on the record. And my colleague is recording the event. So many of you who want to clarify your points, you'll be able to listen to it after this event. Now, given we're very limited in time, we only have about 40 minutes, I'd like to invite Dr. Li Jungs to start with his argument. Why would you consider the so-called debt trap diplomacy argument is very much limited? Now, Li, the floor is yours.
Thank you very much, and thanks to you all for coming. The argument of our research paper is that China is not engaged in debt trap diplomacy, and indeed it would struggle to do this even if it wanted to. We think that this misunderstands both China and recipient countries, and we'll explain why. In reality, BRI projects are driven bottom-up by Chinese state-owned enterprises prospecting for business outside of China and by elite interests in recipient countries. So the challenges of the BRI are principally around the governance of development financing, not geopolitics, which is to say that although the BRI may have geopolitical consequences, it is not being driven principally by geopolitical objectives. The myth that we're attacking is debt trap diplomacy. You will have all seen headlines and cartoons like this suggesting that China is deliberately luring developing countries into unsustainable debts, knowing that when they fall into inevitable debt distress, the Chinese will be able to seize the asset in question and thereby extend China's strategic reach. This is the myth of debt trap diplomacy, and it is extremely widespread. It is picked up in all the major outlets across the world. And I could give you lots and lots more examples of this. It's also been picked up in policy circles too, including by the United States. Rex Tillerson, when he was Secretary of State, called the BRI predatory economics, which was intended to result in financing default and the conversion of debt into equity. And the Vice President, Mike Pence, talking about the case that inspired the idea of debt trap diplomacy, Sri Lanka accused China of using debt trap diplomacy to establish a forward base for China's growing blue water navy in the Hambantota port case. Now, there are two aspects in which this argument can be seen to be wrong. First of all, it gets China wrong. If we look at the inception of the BRI, where it came from, we can see that it has primarily economic drivers and is primarily governed by economic agencies, not military or diplomatic or strategic agencies. Really, the BRI grew out of long-standing efforts to build transnational infrastructure projects that have been going on for a good 10, 15 years. Many projects have been rebadged. It was given a fresh impetus after the global financial crisis by some deep problems, some deep crises within the Chinese growth model. The emergence, the sustained emergence of massive overcapacity in basic industries, declining business opportunities for state-owned enterprises involved in the construction sector, massive over-accumulation of capital within the Chinese banking system. And the BRI really is a spatial fix for these problems, and it is very much led by the National Development and Reform Commission, which is in charge of Chinese economic planning. The military is not involved. The Ministry of Foreign Affairs is an extremely marginal player. So the system that actually governs the BRI is the system used for Chinese development financing. And as we've documented, including in a piece for International Affairs, that's the regime governing Chinese development financing is highly fragmented and non-strategic. It's got many different agencies involved, highly convoluted process that is often bypassed by self-interested agencies, and very limited capacity to assess the feasibility and viability, profitability of proposed projects overseas, and no real capacity to inspect companies engaged in implementing development financing projects overseas. And this has resulted in many documented instances of poor projects being approved and problematic implementation in developing countries. Another feature of China's development financing regime is that it is very much recipient driven and always has been. So disbursements do not start because somebody in Beijing thinks that it's a good idea to build a port in Sri Lanka. It starts with a request from recipient countries. So they have their own interests in pursuing these kinds of projects, as I'll mention in a moment. Sometimes these countries are indeed egged on by state-owned enterprises from China, which are prospecting for profitable business opportunities in the global south, hoping that they can support recipient country elites to pursue a project and apply for financing from Beijing, and thereby get the tied aid contract at the end of the day. The debt trap diplomacy narrative also gets recipient countries wrong. It depicts recipient countries as passive victims falling naively into a trap laid by China. But actually in almost every case, in fact, really in every case, they're willing partners. It is impossible for China to build infrastructure in other countries without the consent of the sovereign governments of those countries. It's also another barrier is that if sovereign debt is contracted to finance the projects, then of course the government must sign those loan deals. So they're not passive victims, but they're willing partners. And the question is, why would they want to participate? There is, of course, a generally recognized need for infrastructure in the global south. The World Bank estimates that there is an infrastructure gap of nearly $100 trillion in the global south over the next decade or so. This is really important for many developing countries to maintain economic growth. And many regimes in the global south derive a great deal of their legitimacy from their ability to generate sustained economic growth. But there are other sort of less respectable reasons why elites in developing countries might pursue BRI financing for their projects. There's a lot of literature to suggest that Chinese aid is often routed by recipient regimes to politically sensitive areas, maybe the home district of ruling elites, maybe certain ethnic regions that will help bolster the power of these elites. It's also possible to link in the clients of ruling elites into these projects. For example, politically linked construction companies can be inserted as implementing partners in these projects. It's possible to get various forms of kickbacks and side payments to your domestic allies. And a final reason why the BRI is attractive for recipient countries is there's a lack of alternatives. If you want to get a project financed, you find it very difficult to leverage private capital. There is a huge amount of private capital sloshing around the international financial system. It's proven very difficult to mobilize that for infrastructure development. And of course, the traditional donors and funders basically abandoned the infrastructure sphere. For a good 30 years, they've only recently started to return to it to try to compete with China. But for 30 years, they abandoned hard infrastructure in favor of so-called soft infrastructure or mostly useless good governance interventions. And now Shahar will talk about the case studies in the report and what our key findings were.
Thank you, Lee, and thanks everyone for turning up. The two cases that we picked here, Sri Lanka and Malaysia, are not picked at random. Both of these countries were portrayed in many accounts of the Belt and Road Initiative as classic examples of victims of China's debt trap diplomacy practices, and subsequently as cases of, if you like, backlash against Chinese practices. Both of these narratives are not entirely accurate, but these cases are quite revealing in terms of our argument in the report, as Lee just discussed. And I'll just go through, I can't obviously discuss them in detail in the very short time that we have, but what I'd like to do is just tease out some of the key findings that both of the cases share in common and what they tell us about the debt trap diplomacy thesis. And this links up with the arguments that Lee has just discussed with you. So the first point is that despite the narrative of debt trap diplomacy suggesting that China was out there trying to get projects financed and built that supports its geopolitical interests, the key controversial projects in both of these countries were actually initiated by the recipients. In Sri Lanka, the case of the port of Hambantota, which is arguably the case par excellence in the literature on debt trap diplomacy, has actually been in Sri Lankan development plans going back to the 1970s. It was included in government development planning in 2002. But previously, a variety of feasibility studies found that it was actually unfeasible until in 2006, a Danish company did actually find that it could be made commercially feasible, and then it was green-lighted in 2007. Whereupon the Sri Lankan government went out seeking investors. It didn't just go to China, it actually opened it up to a variety of interested parties, but no one else responded positively. So Hambantota port ended up being built by China, not because the Chinese government went over to Sri Lanka and asked to build it. The same applies to the case of the East Coast Rail Link, which is arguably the most controversial project in Malaysia, and many other actually Chinese-built projects in Malaysia. That project has been in Malaysian development plans for at least a decade before it was initiated in 2016. The project was already, it originated essentially as an attempt to manage the development prospects of Malaysia's poorer East Coast. But it ended up being funded not because China went out looking for it, but because former Malaysian Prime Minister Najib Razak and his crony Joe Low went out suggesting to China that the project could be built at an inflated cost in order to address the shortfall from the staggeringly corrupt Sovereign Wealth Fund 1 MDB, which they were using for political and personal gain. So that's the first finding of both of these cases. The second one is that the debt trap narrative suggests that China was the one ensnaring countries in a debt trap. But in both of these cases, that is not actually accurate. In the Sri Lankan case, there was in fact a debt problem, but that debt problem actually originated in Sri Lankan borrowing in Western capital markets. In particular, Sri Lankan borrowing increased after the initiation of quantitative easing, which created the circumstances where global interest rates were very low and lenders were lending a fair bit of money to developing countries. But that debt was actually never particularly sustainable. What actually brought the debt trap into a spot of bother for the Sri Lankan government was the tapering off of the QE program in 2013, which increased the borrowing cost for the Sri Lankan government, causing a debt trap. But China's part of that debt that the Sri Lankan government had to pay was actually quite small, and Hambantota Port's part of that debt was even smaller. We've estimated the entire size of China's debt, of Sri Lanka's debt to China, to be around 9% of its total external debt. Most of the debt that Sri Lanka owed was to other sources, especially Western financial institutions. Ultimately, when a Chinese SOE provided at least the port for $1.3 billion. The money was used to actually pay other creditors of Sri Lanka, not China, and also to shore up Sri Lanka's dwindling foreign currency reserves. In the Malaysian case, it's even more straightforward because Malaysia never had any sort of debt distress. In fact, the IMF in 2018 suggested that its debt, which was manageable even at that point, was actually looking like it would decline by 2022. So there was never any debt distress of any kind. The third point is that the bailouts, which we have seen in both countries, did not result in any form of asset seizure. In the Sri Lankan case, the argument often goes that the debt that was that Sri Lanka owed to China was used. Money was given back to China in return for the asset being seized by a Chinese SOE. That is not, in fact, what happened. In reality, what happened in Sri Lanka was that as I mentioned previously, the loan that was given to Sri Lanka was used to pay other creditors. The Chinese company actually ended up leasing the port for 99 years, and the asset was never seized. In the Malaysian case, because there was no debt distress of any kind, no project was ever seized by China. And the final point that they would like to make is that both of these cases actually show that the overall result is actually negative for China. So there was never any gain from China from these practices that we're just describing in the project. The first aspect of that is that Chinese SOEs ended up taking on greater risks than they initially wanted to take. In the case of the Hambantota port, the SOE SM Port ended up having to invest more money in the operation and working quite hard to make it work better, and in fact actually managing to increase traffic through the port quite substantially. In the case of ECRL, the Chinese SOE, China Communication Construction Company, initially meant to build the project only as a turnkey project and then turn it over to the Malaysian government, but in the end had to, as part of the renegotiation of the deal with the new Malaysian government in 2018, had to step in as a partner in a joint venture and therefore share the risk of the project not being commercially viable. And given that the project is estimated by many to be another case of white elephant, then that is a substantial financial risk for this company. Finally, we can't even see any strategic or diplomatic gain for China. On the strategic side, the idea that the port will serve the Chinese Navy has no evidence to support it. In fact, it was the Sri Lankan Navy that moved its operations to Hambantota. Other navies have visited the port, but not the Chinese Navy, so there is no evidence for that. In the case of ECRL, the idea that the rail line could actually substitute maritime-borne traffic through the Straits of Malacca doesn't have a lot of credence because it's very difficult to scale up the kind of traffic, the kind of cargo that goes through the Strait of Malacca via rail. So there's very scant evidence to support this argument. And finally, the kind of backlash that we've seen in both countries has actually created a very significant diplomatic headache for China, which meant that there are clearly no diplomatic gains. In fact, arguably the Chinese government now scrambling to shore up its position in both countries.
Thank you both for your rather illuminating points in here. Now, I've noticed they are bubbling with a whole rounds of questions in here. Now, let me group some of them and we take 2 rounds at least to see how the time fit. Now, among the members of the audience is basically asking, so to what extent that China will be able to tell an accurate narrative on the Belt and Road Initiative and therefore to communicate properly? I mean, even including myself, I've wrote at the Financial Times recently saying part of the reason why the BRI has caused so much confusion is because the communication wasn't clear enough. You know, if you come back to the question now, when they come to European foreign policy, who to call, that Kissinger's famous question. Now, even when they come to China's BRI and which number the foreign investors would dial again. So, for a question for both of you to start with, and how the Chinese authority will be able to tell a compelling and also accurate narrative when they come to the Belt and Road Initiative, if we are going to debunking those myths around the BRI. Lee, perhaps I'll let you.
Yeah, I'll take that one. So, I mean, these are very good questions. Aftab Siddiqui and Pak Lee asked these questions. Why can't China get a more accurate narrative out? I think there's two parts to that. One is that it speaks to the continued domination of international messaging, narratives, media, and so on by the West, particularly by the United States. It's very difficult for China to get its own message out using English language media. And so a kind of, beltway narrative tends to predominate. The second thing, though, is that a more accurate understanding of the BRI would involve China admitting severe problems within its own domestic governance system, which are not supposed to exist, which would be very embarrassing for the Chinese state. And it would also involve admitting that China has engaged in very bad and corrupt practices. So Shahar mentions the projects in Malaysia, for example. These were projects that the Chinese were approached by the Malaysian government and asked to artificially pad contracts so that money could be skimmed off to be rerouted internationally to bail out one MDB. And it appears that they agreed to do it and then did it. So it is not that China is some kind of innocent lamb in all of this, that it never does anything wrong. That's not our claim at all. So I think part of the problem is that in order to explain these cases that go badly wrong, you basically have to admit a certain level of incompetence and malfeasance, which would be too embarrassing for the Chinese party state.
Shahar, any other additional points?
No, that's fine, thanks.
Yep. Okay. Right. There are also a number of questions around the Chinese state-owned enterprises. I mean, obviously, this is a company or a social institution with the Chinese characteristics. Now, the myth around the Chinese SOEs and its involvement around the BRI. One of the questions from the audience is, if the Belt and Road Initiative is really driven by strong economic incentive rather than geopolitical consideration, and why would actually the Chinese state-owned enterprises taking such risks? And is it something just because those SOEs, because they're followed by the party and therefore they have to show the loyalty to the party, or any other reasons? I mean, perhaps Shahar, you can explain on this question.
Yeah, that's a good question. I think it depends, because not all of the BRI projects are the same. So in some projects, the risk to the state-owned enterprise is actually quite small. I mentioned before that, for instance, the ECRL project was meant to be a turnkey project. So that's fairly risk-free. There's a loan, it's backed by the government of another country, the SOE just recruited, it does the work, and he walks away. So there's very little risk, they get the work. There are other cases in which they can take on greater risk, and that's where they actually, for instance, build something as a build, operate, transfer project, or as part of a joint venture, and there the risk is certainly greater for them. So as a rule, I think they would try to get projects that are less risky and try to shore up the commercial bottom line. And we have evidence in all of these cases of state-owned enterprises, even when pushed as a result of negotiations to take on things they didn't want, working to actually ensure that they don't get as adversely affected by it as they could have been otherwise. So for instance, in the case of VCRL again, even though they ended up having to go into a joint venture, they also managed to get a parcel of land from the Malaysian government that was worth a certain amount of money to improve the bottom line. That said, the SOEs, as the entire Chinese economy, as we argue in the report, is facing some very serious problems of overcapacity in terms of labor, in terms of productive capacity, and they're looking to get work. So sometimes they're willing to take on projects even when the fundamentals are not particularly strong, just to keep the momentum.
So it's more about setting the market foothold rather than making profit.
It can be in many cases.
Right. Okay. Now let's switching back to some.
Can I just comment quickly on that?
Yeah, go ahead. Yeah.
I think there's two other things one can say about Chinese state-owned enterprises. One is that they are latecomers to international markets, and so they find that the easier, more stable markets are sewn up by foreign multinationals already, and so they're forced to enter more risky territories. And secondly, I think we have to think about the incentive structure of the managers of state-owned enterprises. First of all, their most important incentive is to make money for their companies. They are profit-oriented, first and foremost. They do also need, in order to climb up the party hierarchy, they do also need to show willing and enthusiasm for central initiatives. But that does not mean that they are simply instructed that you go there and do that, you go there and build that. And indeed, there are cases where state-owned enterprises have basically been told you should engage in these kinds of projects, and then they appear to make it look like they're doing it, but actually they don't ever actually build the projects. So, for example, in Romania, nuclear power plants were supposed to be the main thing that was the big driver of the BRI in Europe. And many times Chinese leaders have said, you should go and do these projects. And the nuclear companies have not done these projects because they're not profitable. And we find that in many different territories around the world.
Yeah, I mean, surely, as far as I know, is the Chinese oil company, which has already collaborated with many African states for many, many years. And by BRI, the Belt and Road Initiative, is really nothing new for the Chinese oil companies and also any other energy-related companies. So taking your point, now let's switching back slightly on the hegemony issue, that sense of if we're putting a bigger context on the United States and China competition. Now, when it comes to the Belt and Road Initiative, there are two questions around in here. Now, to what extent would we consider China capitalizing its economic and development tools in order to gain more preferences in the post-American order? And so could we actually consider, in the IR term, the low politics of the Belt and Road Initiative development would eventually merge into something kind of high politics and to challenge the hegemony of the United States? And obviously that's a very much IR question. Again, also, if we are putting on the even longer term competition between China and the United States, would actually the nature and also the characteristics of Belt and Road would evolve over time. So the hegemonic questions for both of you. So Harry, would you like to start? Yeah. Mm-hmm. Yeah.
I'm happy to take it first. The question that sometimes IR people would put forward is, okay, so in the longer term, we're seeing these dynamics playing out. You're pointing out things that are more significant in the short and medium term, but in the longer term, these trends that our scholars expect would assert themselves. Now, obviously, no one can tell what's going to happen in the long distance future. I certainly don't claim to know that, but I would argue that understanding the dynamics that are at play here is really important in order to understand the prospects of the Belt and Road Initiative. So, for instance, the kinds of reaction that we're documenting in the report from recipients and the kinds of entanglement that China's find itself in, or Chinese companies and consequently also to some extent Chinese diplomats, they do matter greatly in terms of the potential impact of the Belt and Road on China's diplomatic relations. As we've argued in this report, China actually did not gain from this, it lost out. But there is a genuine need out there for some of the things that China is doing, as we argue as well in the report. And increasingly, we are seeing others coming into the game, for instance, of infrastructure financing that has made some of these, that has made Belt and Road and some other activities of the Chinese party state reasonably popular among recipients. So I don't think that we can, at this point, essentially identify any particular trend in terms of how this process is developing. We're going to have to see what happens in relation to the competitors that are stepping in and how the recipients would react, because ultimately the fate of the Belt and Road Initiative or its competitors is going to be determined by the recipients of these programs.
Yeah, it's not that the BRI and geopolitics are two completely separate things and they have no relationship with one another. But I think the way that they pan out is quite different to the debt trap diplomacy narrative. So you have recipient countries and state-owned enterprises jockeying to push a particular project. And if top leaders in China have expressed a desire that China should cultivate good relations with that country, then that will tend to unlock permissions, approvals, political and economic support for those projects. It doesn't mean those projects were conceived top down in Beijing. They bubble up from below, but they have an enabling kind of envelope at the top, if you like, set by the sort of geopolitical thinking of top leaders. So, you want to cultivate good relations with Malaysia and Sri Lanka. And so that's why these deals are, one of the reasons why these deals are able to go through, even though they're very shonky. So as US-China relations deteriorate and the rivalry intensifies, then the temptation to create that sort of enabling environment for kind of geopolitical relationships to be supported by development financing will be there. But as Shahar says, it doesn't always have the correct consequences, the desired consequences, because things go badly wrong. So, and China has actually been trying to rein in some of these malpractices and to improve the quality of BRI projects, because it knows that it's not benefiting geopolitically from the BRI, because its reputation has been trashed as a result of many of these deals. So it's not very straightforward, but there clearly is a relationship to geopolitics.
Right. Okay. So hegemonic continuity in that sense. Another thing which very much interested by many investor communities, which is around the China's usage in terms of US dollars or use the renminbi in terms of dealing with the massive projects. Now we come to the question on renminbi internationalization. So why most of the BRI projects so far has been predominantly financing by US dollars, not by renminbi. So even if China want to promote that sense of the so-called renminbi internationalization, but then why the US dollars has been widely circulated rather than using renminbi? So the currency question, if any of you would be interested in taking.
I think the reason is largely because the BRI is in part intended to soak up China's large dollar reserves. So I mean, those reserves have shrunk in the last few years because of the trade war. But at the start of the BRI, there were $4 trillion worth of reserves, which were mostly going into loss-making US Treasury bills. And they were trying to find a more profitable outlet for these dollars, essentially. And it's standard practice that international lending happens in US dollars because it's a reserve currency. So that would be my view. And I think the idea that BRI can be used for RMB internationalization, I think that was always a bit of a pipe dream. RMB internationalization is a pipe dream insofar as the powerful interests within the party state want to maintain a relatively fixed exchange rate, which allows them to manage the internal Chinese economy. And there's been some good projections by scholars in Hong Kong about, even with extremely generous assumptions, the extent of RMB internationalization way into the future is still going to be very low, and it's not going to challenge the US dollar as an international reserve currency.
So there's only political significance for China putting that basket for the IMF buying, reserve currency, basically. Okay.
I would just add very briefly on internationalization that as long as China is determined to maintain its export surpluses, it's unlikely to create a currency that's going to rival the US dollar because it doesn't generate demand for its currency elsewhere. So that is a fundamental problem in the structure of the Chinese political economy that undermines the internationalization agenda.
Okay.
And I don't see any appetite for that to change in the coming years.
Right. Okay, so basically it's a demand and supply question. You don't have many demand regarding renminbi in the international market. Yeah, great. Okay. Well, I mean, I'm having a fist of good questions in here. Can't go through all of them. Let me try to get through some of the questions related to recipient countries. Now, since much focus has been so far as the China Center, let's switching the side. So do we think those recipient countries have really sufficient competence in terms of calculating the risks that involved in the BRI projects? And also, what do you think of the concern over ethical issues on the Belt and Road Initiative? I mean, obviously, European Union has constantly saying by no way that European infrastructure could be coordinating with the China's BRI, because part of the reason is on the dispute on labor conditions. So would you actually consider that ethical issues has also been a myth arise from the Belt and Road Initiative? So question firstly on recipient countries, whether they have the capabilities of calculating the risk, and secondly, what are those ethical issues we consider also as being unethical?
Maybe I'll take the part about the risk. Obviously, one of our key findings in the project is that they don't, but we are also suggesting that one of the main ways in which other players, other governments, other organizations can support recipient countries is by actually helping their capacity to develop better due diligence, to learn more about what kind of projects they would like. That's not going to get rid of all the problems, because as we've shown in the report, some of these projects are financed for a variety of reasons which have very little to do with the utility for development, for instance. But it could go some way. At the very least, it could support, for instance, civil society organizations at trying to have some kind of input about the quality of the projects that are being financed. One thing that we need to understand, I think, is that the kind of strong rhetoric that is coming out from some governments trying to, especially the United States government, trying to get countries, for instance, in Southeast Asia to take sides, that's not going to fly very well in the context in which we are, because they do actually require some financing for infrastructure. So the best we can do is do those kinds of things.
On the question about the ethical issues, specifically the environment and labor rights, China is rightly regarded as notorious on these issues. I mean, this is not a myth. Environmental protections are often very weak because although Chinese regulations over state-owned enterprises operating overseas have tightened in 2 rounds in response to international criticism, first of all in its conduct in Africa in the mid-2000s, and then more recently with the debt trap diplomacy stuff, the environmental regulations are still very much below international standards. The regulators, the financiers, the oversight agencies do not have boots on the ground in recipient countries, so they can't really see what's going on. There are not clear kind of reporting or kind of whistleblowing mechanisms. The whole system relies explicitly and very heavily on regulation in the host state, by the host state government, and that's often weak. So again, this is a question of weak governance in recipient states. In terms of labor rights, I mean, clearly the Chinese party state is no friend of the working class. And indeed, labor is often highly exploited in Chinese projects, and a lot of Chinese labor is brought in. Often, it has to be said, due to skill shortages in the recipient country. That's a legitimate issue, but often because labor costs are higher, and there's a view of foreign workers as being lazy. In other words, they won't work as hard for as little money. And so often what these projects involve is a sort of carve out, sort of offshoring of labor rights, so that Chinese labor regulations effectively apply in implementing these projects. And that's certainly a serious concern for organized labor and working people in those countries.
So it's not just an issue with the labor condition, but also the issue with recipient countries themselves as well, right? All right, okay. Now, if we're switching back to the question on reputation, because obviously what we do know is if you're making infrastructure investment to a particular country, it is not only about the financial viability of China that has, but it's also about China's reputation. Now, this question catch my eyes, and partially it's because what we are aware is in the recent months, that seems to be this whole notion of the so-called warrior diplomacy has gained so much popularity again in the Western political establishment and also among Western media. So would actually, if we are considering that China continue to pursue is the Belt and Road Initiative, and maybe because of China's certain actions in Xinjiang, in Hong Kong, in Taiwan, would perhaps deter the country that looking for financial investment from China, and then therefore pushing those countries looking for financial assistance from European Union and United States. I mean, highly hypothetical in here. Was that because of that reputation damage that perhaps Chinese diplomacy we have perceived so far, and therefore asking those either existing recipient countries or the prospect recipient countries seeking the funding from, say, more established economies like European Union and United States? Anyone?
I mean, my view and what we've found is that recipient countries will take the money where it's offered. And the Sri Lankan government was very explicit about that. If the Indians want to give us a port, if the Americans want to give us, then fine, but they don't. So we went to China. One of the recommendations that we make is that there needs to, if we're interested in improving outcomes, then we need to see more donors and re-entering the development financing space, and not necessarily just competing directly with China, but maybe also cooperating with China. So we need to see new mechanisms to mobilize private capital, which at the moment is engaged in a lot of useless speculative investment all around the world and could be usefully channeled into developing countries' infrastructure using correct vehicles. But also, like on the model of the AIIB, where almost all of the projects funded by the AIIB are with other development partners and therefore governed by their processes. That is another way forward. Of course, it doesn't allow for all of the side payments and dodgy deals and kickbacks and so on that various parties are incentivized by. And that's why it will be a political struggle to push forward towards that. It's not a technical fix, and that's why it will be difficult. But certainly it's not in China's interest to have a bad international reputation. And that's why it is trying to clean up its act, but it is a struggle.
Yeah, sure. Shahar, yeah.
I don't have much to add, apart from just to say that we are seeing a lot more efforts to compete with China in the infrastructure space, but at the moment, the scale of these so-called competitors is nowhere near the scale of what China has been offering. So to that extent, many recipients continue to turn to China, even when they have some reservations about doing that.
Mm-hmm. Okay. Right. Since much of focus of this study and also the entire discussion has been on state sector and state actor. Now we know in the foreign policy analysis, any single particular company can be a foreign policy actor by itself. Now I'm going to turn the question on the private sector both in China and also private sector across the world. So to what extent would you consider that the Belt and Road, as they goes along, would expecting more and more private sector to participate in the Belt and Road initiative on the one hand, and also whether those private sector would like to absorb the financial cost burden contribute part of the Chinese government's grand strategy or this entire initiative. So would you consider actually in the future, you would see more and more, see, for example, Chinese private equity or any Western private equity companies financing those Belt and Road Initiative projects?
Yeah, I think that this is one route which could actually improve things. There's a lot of experience with project financing and project management in the international markets, Western markets in particular, but also Japanese. And that could usually be harnessed to the expertise of China in terms of actually implementing projects, because it's very weak on those other aspects. But that would require a very different way of working, because of course, the calculation that Chinese state-owned enterprises make is that if they can transfer all the risk onto somebody else and gain all the profit, then why not? Because they're basically the recipient country is borrowing from the Chinese state-owned policy banks. The money goes directly to the state-owned enterprise. That's a massive win for the state-owned enterprise. And so there's a massive moral hazard issue here. Mm-hmm. With private financiers, they want to know that they're going to make a profit. They want to know they're going to make a return. Therefore, they're very interested in project fundamentals in a way that Chinese state-owned enterprises, insofar as they're able to transfer risk, are not interested in project fundamentals. Is it viable? Is the country going to be able to make enough money to pay it back in the long term, et cetera, et cetera? Private investors want to know they're going to get their money back. Mm-hmm. And so if they're going to be drawn in, there would have to be very, very different governance arrangements, very different financial vehicles. One company that has recently started up, which is directly involved in trying to take on distressed Chinese projects in the global south, inject private capital and make them revenue generating. So this is an area of interest for some braver international investors.
Mm-hmm. Shahar?
I'm going to leave it there. Thanks.
Right. Okay. Now I realize time is up. Time flies so quickly in here as well. Brilliant answer. And I realize every time when you start with the BRI discussion, you always make yourself become more confused rather than become much clearer. But overall, just please allow me to thank my two brilliant speakers today, explain to us and somehow try to demystify this China's gigantic Belt and Road Initiative, the so-called project of the century. I'm pretty sure that we're going to have plenty of discussion to follow up with. So it won't be the last time we see you both, and very much look forward to have furthering this discussion with you both and with many of you in the audience in here today. And again, thanks for both speakers and also for the audience who will give up your precious lunchtime to join us today. And thank you so much and have a lovely weekend.